Okay. So another question is about audits. So we have someone that received a notice from the IRS about an audit, and they're worried because they're saying back in the days audits were very extreme. Is it the same way now, or has things changed?
Things have a couple things have changed. So one is that the majority of audits now are correspondence audits. The days of you getting hauled into the office and them grilling you under a fluorescent light, those are pretty much gone. Most things are by mail. You get a letter, they'll say request for explanation of items, and they'll list out we want to ask questions about these three things. Send us your documentation, and we'll get back to you. So even those, they come in these big manila envelopes and they're these thick documents. Even those most people don't respond to. So if you don't respond, the IRS just makes its decision. I'll give you a hint. In their decision, you lose. And then they give you an assessment. Audits are, I don't want to say friendlier because they're not, but they're easier in the sense that you just do it going back and forth by mail, sometimes by phone if it's a big issue. Now that the downside of that is that they take a lot longer because it's all this back and forth, going back and forth with the mail. The IRS is implementing an upload portal. I am highly skeptical about this portal and how well it will work, but they are trying as far as to get information flowing back and forth more quickly. They say, I think they're saying by the end of this year, it'll be functional for everybody, but to see. They said that for a lot of things that has not ended up being true. That's the main thing. Now, the difficulty with audits is not so much even the final like dollar amount that ends up happening, because here's the basic thing with audits. They're questioning some particular aspect of a tax return. And let's just assume we're talking about individuals. Every year they pick a pet issue and they'll audit this thing more than other things. You can also get your name picked out of a hat just randomly. That does happen. Let's say this year they're picking charitable deductions. And we never know for 2 or 3 years because that's how far behind their audit cycle is. So they'll say, let's charitable deductions, we're going to audit 700,000 charitable deductions this year. And if you're in that bucket of 700,000, then you get audited. They'll send you a letter. They'll say, we need an explanation of all these charitable deductions you have in your tax return. And that kicks off the process. So let's just say you come up, you have no documentation to back up your charitable deductions. So they're gonna close the case saying that you are not entitled to this deduction. They're gonna reassess your tax return and recalculate the tax owed based on that change. And they're gonna probably, depending on the numbers, they might also assess you a penalty of potentially 20%. And then the whole thing carries interest. Depending on the issue, it can be a minor amount or it can be a significant amount. It just depends on what's going on. But whatever it is, it's a dollar amount you owe. And what most people do is they end up setting up a payment plan and they pay it over time. It's definitely a burden, but it is not the end of the world. The problem with the whole thing is the process. The process is the punishment. That's the whole thing with audits, is that it is such a time suck and an emotional burden going through all this that it is just sapping your life. The real goal is to do things in a way that are reducing. It's never zero, but you'll want to reduce your risk of audit as much as possible. You know, actually, we have a checklist of red flags that these are things that will definitely create audit issues. We had somebody come to us last week or the week before, and they were saying, "Hey, I got this audit for 2021. What's going on?" And this guy was doing his own taxes and did what I rail against constantly with business owners is that he filed a big loss on a Schedule C against W-2 income. Now, I know that sounds technical, but basically, what he declared on his tax return was that he lost a whole bunch of money on a side business, and it was done in a way that raises questions automatically. That makes perfect sense that he got audited about it. Now, in the positives of his thing is that he did have real expenses that, to a real side business, but it just was done. It was filed in such a way that it made the IRS suspect. And then he got this notice, and then he didn't respond to it, and then the IRS made their own conclusions, and now he's in the position that he's in. We're working with him to see what we could do there, but you want to avoid that go on the front end because again, the process is the punishment. So even if there was nothing we could do for him and he owed whatever the dollar amount is, that's still, you can deal with that. It's however many dollars, but it's just back and forth. And sleepless nights and oh, they could come after me. And I've been there. If you remember my story, that was like 3 years of this stuff, or 4 years of it, whatever it was. I understand all the angst. Mine wasn't an audit, mine was an SFR, which is a slightly separate thing. Every year when tax time rolls around, you'll see all these articles about how, oh, or you'd see these memes and clips on YouTube or TikTok or whatever. And there'll be this scenario of, if the IRS already knows what I should pay, why don't they just tell me rather than me having to go through this thing? And the answer is that they don't know. That's the whole point here. That's what a tax return is. However, if you don't file anything, then they will, after a couple of years, they will do an SFR, which is substitute for return. So they will make up their own tax return based on the info that they do have from third-party sources like W-2s and mortgage interest and whatever. And they will make the worst possible assumptions on your behalf and then come up with a number. And if that number is that they owe you money, you will never hear from them. If that number is you owe them money, then you'll start getting letters, which is what happened to me. They filed SFRs for, I think, 2003, 4, and 5. And then it showed them I owed them $1.3 million. And so I started getting letters. But as it turned out, that was all incorrect because the way they built their return was wrong. And I had to then prove that fact. So it was a painful process. Audits are not like they used to be. However, they're still not fun, and I don't recommend them. So
Right.
that's the short version: is do things the right way the first time, and you reduce your risk of getting audited.